Okay, let's dive right in. Today, we're going to break down the investment story behind Lithium Argentina, a company that, according to our source material, is making some serious waves in the green energy space by turning from a speculative bet into a real global powerhouse. Performance over promises. Yeah, this quote, it really just nails the whole story here. In a market that's so often full of hype, what our source calls lithium hopium, it's kind of refreshing to look at a company that's all about delivering actual, measurable results.
And that really sets up this tale of two different kinds of lithium stocks, right? On one side, you've got the ones built on speculative hope, you know the type, often getting bogged down in delays and all sorts of risks. And then on the other, you have the ones with proven production. The source is pretty clear where they put Lithium Argentina, and that's firmly in that second camp. De-risked, and, this is the kicker, right on schedule.
So the big question is, how'd they do it? Well, it really comes down to what the source is calling a masterclass in execution. This is the thing that truly sets them apart from the rest of the pack, especially when you look at how successful they've been heading into 2026.
Actually, the source goes even further. They call the company's latest operational update the smoking gun for the bull case. Think about that. It's like they're saying, here's the undeniable proof, the evidence that they are delivering on every single promise, and that the really high-risk, nail-biting part is, well, it's pretty much over.
So what do they actually do? Let's get to the numbers. They cranked out 34,100 tons of lithium carbonate in 2025. Now that's not just a good number, that's the absolute top end of their own annual guidance. So they didn't just meet their goals, they smashed them.
And this number right here, 97%, this just drives the point home. In that final quarter, they were running at 97% of their maximum design capacity. I mean, that is huge. Why? Because it tells you the really tricky, super risky ramp-up period, it's done. It's in the rearview mirror. They're not a developer anymore, just hoping to get things working. No, they are a fully operational, cash-flowing producer, period.
Okay, so how are they so efficient? What's their secret sauce? Well, their biggest advantage is their method. We're talking brine versus hard rock. Here's a simple way to think about it. Instead of this super expensive process of mining and crushing solid rock, they're basically just filtering lithium out of salt water. It's a fundamentally cheaper way to get the job done.
And that cost advantage is a really big deal. Our source points out that their Q4 cash operating cost is expected to drop below $6,000 a ton. In today's market, that gives them these absolutely massive profit margins. I mean, margins that a lot of their hard rock competitors can only dream about.
All right, so we've established that they're a low-cost producer, right? That's the foundation. Now the source builds the whole investment case on top of that, and it rests on what they call three key pillars of strength.
So what are these three pillars? First, there's a big political catalyst in Argentina called RIGI. Second, they've got this super powerful partnership, the Ganfeng Synergy. And third, some really smart strategic wins on the management side. Let's dig into each of these and see what they mean for the company.
Okay, pillar number one is this massive political tailwind blowing through Argentina. This new program, RIGI, is a game changer. It's designed to bring in huge investments by offering 30 years of tax stability and a lower corporate tax rate. So what does that really mean? It helps get rid of what investors call sovereign risk. You know, the fear that a government could just change the rules and wreck your investment. That's a fear that's held this stock back in the past, and now it's being addressed head-on.
Pillar number two is all about who you partner with. And wow, Lithium Argentina is in a joint venture with Ganfeng. If you don't know, Ganfeng is the undisputed heavyweight champion of the lithium world. This partnership isn't just about technical know-how, it's also about getting critical funding at great rates. And that means they can grow without having to constantly dilute shareholder value. That's a huge plus.
And the third pillar? It's all about leadership. I love this quote. The builders are handing the keys to the operators. It just sums it up perfectly. There's been a recent shift in management, and it's a huge signal that the company is graduating from the construction phase to the operational phase. That's a sign of maturity that big institutional investors are always looking for.
So, they've proved they can produce, that's clear. But the story doesn't stop there, not by a long shot. The source material lays out this really ambitious growth plan to go from being a successful producer to a true industry powerhouse.
And this timeline here really maps out that ambition. They're starting from a super strong base of around 40,000 tons, but the plan is to more than double that with what they're calling Stage 2. And then they're going to integrate this massive PPG project. The end goal? I mean, get this, a staggering 150,000 tons per year.
that's just a whole different league. So you might be asking, who's going to buy all this new supply? Well, the source points to what it calls the ESS X factor. ESS stands for Energy Storage Systems. We're talking giant batteries for power grids. And that market is absolutely booming, even faster than EVs in some places. And the best part? These systems use the exact kind of battery-grade lithium carbonate that Lithium Argentina makes. So they've got this massive market tailwind pushing them forward.
Okay, so let's pull all these threads together. What's the bottom line from the analyst perspective according to our source?
The source's Traders Corner really grounds this whole story in cold, hard numbers for January 2026. You can see it right here: full capacity production, a really strong liquidity position with over 150 million bucks, and that all-important Tier 1 low cash cost. The numbers back up the story.
And all of this leads to the core thesis. The source is pretty direct. They see this as a re-rating play. So what does that mean? It means the market is finally waking up and changing its mind about Lithium Argentina. It's moving them out of the speculative miner penalty box and putting them right into the profitable, proven producer category.
The main takeaway here is really all about that transition. According to the source, the whole story is flipped from just being about hope to being about reality. It's gone from construction to cash flow. And that leaves us with one big question to think about. Is this the exact moment a speculative miner finally becomes a global powerhouse?